All right, welcome to the show. QCI show number 3. We're going to try something a little bit different today. My co-host Chase is threw out his back. It's not funny. It's not funny. It's serious injury these days for athletes like himself. So we're going to try this one take. We're going to do it solo, trying to get my other co-founders to sort of jump in and talk about AI, but the show must go on. It was actually funny. I was just watching the Bill O'Reilly clip. Fuck it, we'll do it live. And we got to be here. The QCI show stops for no one. We'll be a little bit briefer today because you're just going to hear from me. I don't get to bounce my ideas and go back and forth. But there was a lot of action this week that I wanted to talk about. And of course, I need to continue to grow my subscribers. So smash the like, smash the subscribe, and a quick shout out to the listeners. We are growing. Feedback is actually pretty good, although mixed. Last week I had a sweatshirt on. A couple of guys reached out and said that was a good looking lightweight hoodie. My wife said I looked like absolute trash and that I needed a stylist. So here we are, just wearing a plain white tee or a gray tee. But let's get into it. So today's anchor story sort of builds off a little bit about what we talked about last week, specifically around political will and skill with regards to California. So right now, there was a study that over 1/3 of California's current commercial real estate projects are either delayed or they're being canceled. So 36% of them. A lot of that has to do with obviously the tariffs. A lot of that has to do with the regulation. However, in a world where more money is going into artificial intelligence infrastructure, how can we let this happen? It's tough. This is going to have a massive ripple effect on California. There's a reason why a lot of companies are moving out of California. It's not a great look. And a lot of our current customers, we know, are still dealing with a lot of distress in the West Coast, specifically California. It's not a great look. We need to buckle down here. We really need that political will and skill. Sure, tariffs are going to have an impact. I think we can overcome that. President Trump has always been pro real estate. If these tariffs do have this large of an impact, my guess is we'll see some change. I don't know, but we're at a crossroads here. California's at a crossroads. Not a great look. Now, there is a tale of two cities going on right now. In Manhattan, which again, we've talked about, and we have some good density with our customers, and especially in the Class A space, on the Vornado earnings call earlier this week, there was a quote from Mr. Roth. I believe the next few years have the potential to be one of the strongest periods of rental growth we've seen in decades. So you have a complete tale of two cities. In California, we can't even get commercial real estate projects off the ground. In Manhattan, according to Mr. Roth, the best period of rental growth we've seen in decades. That's a big opportunity here. California's got another opportunity to clean things up. Let's go on to some quick hits. So I pulled a stat to fact check myself on the REIT net asset value math because I was curious, actually. July trading ended actually with a deep discount. So we knew it was a deep discount, but let's see how big of that deep discount was. US REITs closed July with a median 20% discount to their net asset values. So is the free money trade here? Buy the REIT? No. Buy the whole company, dismantle it, take private, and sell off the assets. I'm kidding. That's obviously not going to happen. It inspired, obviously, Jonathan Gray back in the day with Blackstone, but a little bit of a fact check here. So are REITs a buying opportunity? Don't know, but I can tell you that they are undervalued according to the net asset value of the sum of the assets. Other news this week, ChatGPT 5 is here. Massive launch earlier this week, what would have been last night at the time of filming this. They officially rolled out GPT-5. They're calling it a major step forward for artificial general intelligence. It's smarter, it's faster, far less likely to hallucinate. We'll get back to that. Sam Altman says it feels like talking to a PhD level expert. All users now are going to be using ChatGPT-5. Pro users, you get a lot more. It handles massive increase in token prompts, nails coding, reasoning benchmarks, custom-deceptive outputs, But let's talk about the hallucination for a second, and we'll actually get a call back to hallucination later on maybe one more thing. So when prepping for this episode, I asked ChatGPT to sum up the launch of GPT-5, thinking it would do a better job than just going into an article and finding an article about GPT-5. So I prompted GPT and I said, can you summarize the release of GPT-5? GPT then told me I couldn't find any news confirming the release of GPT-5 as of now. OpenAI has not publicly announced GPT-5's launch or details. However, I can prepare a bunch of bullshit. So I don't know if the hallucination is still gone. I asked ChatGPT, I believe it was GPT-5. I'll have to check to see about the launch of GPT-5, and it was unaware of GPT-5. I then entered an article into GPT, and it was able to summarize for me. Interesting. Still hallucinating. Continuing on artificial intelligence, obviously, and we're gonna stay here for a bit, and I want to see if we can do this. Justin, if you could put up this image that will drop into the show notes here of the adoption of artificial intelligence by departments. Super clever from Zapier. And we know that artificial intelligence is here to stay. We know that some teams, some companies are adopting it much faster than others. Last week, we talked a little bit about how Collier's is using it to make their property management operation more efficient. And that's really one of the threads we're going to pull on hopefully each week. And we're going to start to line up some guests specifically talking about commercial real estate and artificial intelligence, not just artificial intelligence, not just how folks are using GPT, not just how specific departments are using GPT, but specifically how the world that we live in every day utilizes it. But this image is really good as a manager or anybody who's in an organization. It really outlines the type of role. So it has engineering, product, support, people, HR, marketing, and so on. And it breaks it into 4 buckets. So here's an unacceptable use of AI. Here's a capable use of AI. Here's an adoptive use in AI. Here's a transformative use in AI. The chart's really easy to digest. It's to me, honestly, it's a little super simplified. However, this is a phenomenal tool for folks to be using on the hiring front. If you're not using artificial intelligence, honestly, I think it's going to be very difficult to get a job these days. You can be much more efficient. But if you're looking for a job or if you're hiring for a position, I suggest you pull these prompts, you reference this. Folks need to certainly be in the adoptive and transformative side of the house. Sure, they're capable, but it doesn't take that much. And honestly, the best piece of advice I have for a lot of people, just start talking to it. Just start talking to computers, and you're going to learn a tremendous amount. On to the next news item this week. Carlisle. It's been a tough funding environment. Carlisle's a whale, obviously. They just announced they raised $9 billion in a mega fund. Sure, fine. It's $1 billion more than their last fund that they had. Was anybody surprised here that they raised another fund? No, obviously not. What is surprising is that they're completely avoiding office. They're avoiding office, they're avoiding hotel, and they're avoiding retail. They're going all in on resi, self-storage, and industrial. And industrial probably means data warehouses and powering the grid and artificial intelligence, everything I've talked about. No surprise that they raised their money. It's a tough fundraising environment. Good for them. Congratulations. Surprising that they absolutely called out that they're avoiding office, hotel, and retail. I'm sure they'll do fine. There's a lot of statistics out there that now's the time to buy office. Keep it moving. Commercial mortgage lending actually had a surge this week, which is also exciting. Again, more data points pointing to the distress in the market slowly easing its way out. Yes, we've all been waiting for interest rates to drop. Will they drop? I don't have the slightest idea. I know you can bet on it. I'm sure they will at some point. However, commercial and multifamily mortgage loan originations were up 66% higher year over year in Q2, up 48% from year one. Money's moving again. Money is moving through the pipes. It's across all sectors, office, healthcare, industrial. They led the charge, but it's across all sectors. Big win. Big win. Speaking of money moving through the pipes, and again, this is going to be a constant theme because more money is going into here than, to be honest, it's unfathomable, really, for now. AI data center spending surpassed consumer spending in GDP growth contribution. The money going in that's being spent on data centers surpassed all US consumer spending combined. That's outrageous, especially if you consider I can count on my hand where all that money's coming from. Microsoft, Google, Amazon, Zuck at Meta. They're forecasting a record $365 billion in CapEx investments in 2025. Zuck also just announced, and I'm going to butcher this one because I didn't pull it. I was just reading it before. I think he's investing $2 billion more, $72 billion in infrastructure. And I think he chose PIMCO and maybe Blue Owl on the private credit side to sort of help finance that. I'll pull that. We'll get that to the show notes. But this just shows the scale of the boom is crazy. It's absolutely crazy. Now, with all that money going, and with obviously a drastic shift in sort of the what do they call it, the Mag 7 or whatever it is, the top artificial intelligence software companies spending more money than all U.S. consumer spending combined, are we at risk of a bubble here? If AI growth and demand slows down, so all those consumers, if we decide not to pay $20 a month, $200 a month, whatever it costs for Grok, whatever it costs for GPT, can these mega players in artificial intelligence continue to spend the way that they are? Doubt it. If the demand doesn't match the supply, and these guys are really rampant supply, we know there's a massive adoption of artificial intelligence tools. I just talked about how you should be hiring people based on it. But at some point, you're going to have to pick one. You're not going to try every artificial intelligence tool. So will that consumer spending of it slow down? Are we at risk for a bubble? Don't know. We'll find out. Next item this week, Uber. Big fan of Uber. Way back in the day, getting in and around Boston and Brookline, having to not take gypsy cabs, which was kind of my thing back in my early 20s. CEO on their earnings call this week, big push into robotaxis. We know this is coming. They've partnered with Waymo, which is obviously that's being run out of Alphabet. And Waymo taxis are available in Atlanta and Austin. Actually, I believe they're trying Waymo taxis in Boston now, or Cambridge. Maybe we'll have to pull that. But Uber's in talks now with a number of Wall Street banks and private credit and private equity facilities to finance what is a major robotaxi expansion. This might be some fanfare on the earnings call. It might not be. We know Tesla's going obviously massive into here. We also know that Uber has a pretty sizable cash flow. The earnings are up. At some point, computers, robots, they will be driving us around, which, is kind of funny because, I get hammered every time I take an Uber, which isn't much unless I'm traveling for work nowadays because I live in the burbs, just on the tip. And there's tips everywhere, right? So I went to buy my kids a piece of candy at the hockey rink the other day, and it wants me to tip 20% when they didn't do anything. When you're getting driven around by a robot, do you tip the robot? Are you going to piss the robot off? That's the last thing I want to do. I guess I don't mind maybe pissing somebody off. I don't want to piss a robot off. Devastating. One more thing this week, and again, short episode, keeping it relatively light, just me, but the show must go on. I actually got two more things this week. That's what happens when I get unchecked. One of them's, I guess, a little more relevant than others. NASA is apparently fast tracking nuclear reactors on the moon by 2030. That's right. We can't even figure out how to effectively power the United States and the world that we live in, yet we're going to go to the moon and put some nuclear reactors up there. This is all a bid and a proverbial land grab of the moon, just, I believe, to just get China and Russia out of the way. They've also announced lunar nuclear stations by 2035, but this is pretty exciting. Now, it's not going to power a ton, but it will power some space stations, and maybe, like Katy Perry, we could all go up into space at some point, which would be exciting. The last one, and my callback to hallucinations, maybe I'm hallucinating, is psychedelics might be coming back. The FDA had rejected a 10-1 vote MDMA therapy for PTSD. We know psilocybin. We know a lot of folks go on the ayahuasca retreats. However, with the Make America Healthy Again movement, Robert F. Kennedy Jr. is actually prioritizing and leading a new research into psychedelics, specifically MDMA. Exciting news here. A lot of studies to be done. You've seen, and there are some phenomenal use cases, by the way, specifically with PTSD and veterans out there on the help of psychedelics like psilocybin and MDMA. I'm all about this type of research. The research is good because the poison in some of the drugs out there, which we know are terribly addictive. So, and maybe, and just maybe, if everybody took a little MDMA, the world might be a little bit brighter place. That's it for this week. It's a short one. Just me. Hope you enjoyed it. Thanks for coming out.